Hey guys, very good to be back again and to see you guys all live and active. I missed you guys last week. I had to just attend to a domestic matter, and thanks to the admin team that put the post up. Really just took me by surprise and just unfolded while I was almost getting ready to get onto the show. So my apologies for that, but these things do happen, and you just have to manage them as they come along. And as a trader, we have to take all of these things in our stride. So what actually happened in terms of my trading is that I couldn't get back into the market. In fact, let me rather say, I did get back into the market, but I wasn't active enough. I popped in a few times, and when I couldn't find anything to trade. Hey, thanks, John. I couldn't find anything that I wanted to trade. Then, really now I'm properly settled. It's taken a few days to get back in, but let's jump straight in. So, what I have here, what I want to do is, and I still promise to look at the best trades of the week so far. If you haven't been trading, well, there are no best trades, but you can still look at the market. And what I want to show you to also help you in your chart analysis and how you start to look at the market. And I think it will help you start to put all the things that we've been talking about into a format that can help you to identify trades. So I've got these three markets in front of me. This is kind of the view that I keep in front of me, and I can glance at it and kind of say, well, okay, nothing is forming. Maybe I can just take a break for a few minutes. You might come back if the market continues the way that that is forming patterns, the price bars by bar in front of me. I can get away for 5, 10 minutes, 20 minutes, and I should be fine. But it's a market, right? A breakout can occur at any time, the pullback, and you may come back and something's happened. Well, if that's be the case, don't worry about it. So this is what I keep at the back of my mind. I'm going to quickly show you the day setup, and then what I want to do again for these three markets. I just want to go back a week to Monday last week, and we'll put up a day, just one day on the 5-minute time frame. And I want to go through the thought processes that you should start to go through in terms of identifying where you take your trades. I have emphasized over and over again that you need to have a strategy because the market is always moving, and you need to have the discipline to execute your strategy, which means if it sets up, take it, and then just worry about probabilities and random distribution. If it's not there, it's not there. Don't force it to work. I've said to many guys, and I've also got feedback from guys that once you really get into trading price action on any time frame, but specifically on the 5-minute chart, guys are amazed how time actually slows down, and you have enough time to make your decisions, to analyze the markets, to size your trades, and then take it. So this is the kind of view that I have now. Listen, you might have six charts. You don't have to stick to 3. I'm comfortable with 3. I can put up 6, and I'll be comfortable to work with 6 as well. That would be no problem. So whatever you have, you just use this icon here. That sorts out and grids your charts equally in front of you. So it really doesn't matter how many you have. So daily setup. Let's have a quick look at the daily setup. So you can see how it looks. High of yesterday, low of yesterday, and then the open. Now, what I want to show you guys, and this is important because I was out of the market, been out of the market for what now, almost a week, and that week makes a difference, in terms of being in sync with the market. So it's important to get back. So what I do when I'm gone, I know my charts, but what I tend to do is just clean up the chart and start afresh. So if you go back to the monthly time frame, you should have some of these things already marked up on the monthly. That's the highest time frame. This is the chart that you only look at once a month, at the end of the month, beginning of the month, just set it up. But in any case, so what we can see is that we have this pullback, two-bar reversal, and the bulls on the monthly time frame, the bulls are showing strength. Now, all we're interested in is what levels of support should we look at that may have an impact on us trading on the lower time frame. We don't want to be flipping through to the monthly time frame every day. I mean that you will go crazy if you trade like that. So what we have here, we've got, this is the high. If you have a look at that, it's a little bit hidden in my text there. Let's see. Okay, you can see it now. I'll shrink it again. That's high of 2020. Okay, that high there. So that's significant. Like the high of a year is pretty significant. You want to always keep track of that. So another high that you'd look at, high of 2018, another level of support or resistance. In this case, not that it's going up, but to be resistant. That's something that we want to bear in mind. Then on that other level there is a level that we've indicated for this little trading range here. Market going sideways, this low, that high. If we break above that, we might get to a major move above it. And earlier on, when we started, I said 1.3 is a level that the market is going to pull the market up. But that, who knows how long that will take us. It might get there by the end of this year. But that's a magnet that's going to pull the market up. That's all we worry about on the monthly. Then the daily time frame is very important for us. Okay, that's going to determine the levels that we need to really worry about today. More importantly, for today, we want to worry about the high of yesterday and the low of yesterday. Is the market going to break out above that, or is it going to break beneath that, or just stay within that? So that every day you've got to just get in there. It doesn't take long. Plug in low of yesterday, high of yesterday, and of course I always pick up the open. Depending when you trade in the Asian session, pick up the open when you open the market. Why is that important? Because it's going to determine who controls the day, right? If you're a bull, you want the market to end up above the open of the day. If you're a bear, you want the market to end up below the open of the day. And if we end up with the market creating a doji, it really is just oscillating around that open. So always mark that, because remember we spoke a couple of weeks back about a bread and butter strategy, a major trend reversal. So major trend reversals will tend to occur if you're going to get dojis happening in the day, because the market will break through it, go to a high, and there will be a reversal, and attempt to get to the open, and maybe break beneath it, maybe another reversal. Over the 3 sessions, that will give you beautiful opportunities to take trades. So you want to mark that and keep that. Then you also want to have a look at what else is significant. Remember, on the monthly, I said a little bit of a trading range that we had. So there, very beautiful bullish pressure, pull back, okay, to the moving average. Now we have that high, we have that low, and the market is going to say, traders will say, well, if we break above that, we want to create a measured move above that, and that measured move might just take us to a test of the high of last year of 2020. So it's all kind of working in that vicinity. Now, here's what's also important to look at. You see that if you're trading off a higher time frame, that's a very significant trading range. That high, that low, and if the market gets back to the high of 2020 and breaks above it. So if it breaks above it, now you've got to be saying every time you see a trading range, and remember it's a 1-bar trading range. Even if you get a doji in any area that you expect in the market move in a direction, that 1-bar trading range will give you a measured move. So that if market breaks above that and it turns, you're not surprised. Say, hey, what's happening? It could be 1-bar trading range. It could be several. It could be the whole year that creates a trading range. In this case, if the market breaks above the high of 2020, now here's what's interesting. What is likely to happen? What are you looking for? Looking for a measured move from this low to this high, will break above it to get to there. And that level is the 1.3 level. Now, you got to start to slowly think about the psychology in the market and say, why are these things happening? Who really is in control of the market? So the bulls broke above the straight range and they got almost a measured move, and they took profits, okay? And the bears tried to initiate a sell, which they were successful in doing. But look what happened when we got down here. Why, if the bears were strong, would they not have closed beneath this? You know, the bulls reasserted themselves. So if you're a bull, you're still saying, hang on, all the way from down here. This is a bullish market, very strong bullish market. Obviously, there has to be some profit taken at some stage. Let's allow that to happen. Either I'm going to hold on to my longs if you initiate it down here with a stop somewhere down there, whatever the stop may be. I'm just going to hold on, on my case that I think the market will continue to go higher. Or if you've taken profits, complete profits, waiting to see what happens. Say, oh, this is interesting. Other bulls have kept the market up and the bears have failed to break beneath that. So I can start to look for ways, maybe of a moving average to initiate a trade to go long. Or wait, whatever. You can wait here and wait and take your trade. But my point is, you now should be saying, if the bears fail to break beneath this, okay, so the double bottom was created here, a bit of a pullback, we're not analyzing that. If they fail to break beneath and the market has turned, the market then breaks above here. How far is it likely to go? What's there that could pull the market up? And if you put your measured move, you see a big round number 1.3. That's a very significant number that the whole market will be watching. What will that do to you? If you've taken trades and if you have the capacity to hold on to them, you just hold on to the trades. I mean, if you're taking a trade anywhere in here, your stop loss to be in the right place. But then you got to say, okay, because I'm trading this particular time frame, it could be a 5 minutes, it doesn't matter. Because I'm trading here, I'm going to hold on to the trade and see if we get a breakout here, whether we get a pullback, I can add in, etc., and build a position. That's all fantastic. But my goal with whatever trade I'm taking is not to abort the trade and get out very quickly, but to see what happens when we get there. Or if you're going to get there, no matter how long it takes. That is why we always have to put our stops in the correct technical position. If you're going for shorter gains, if you're scalping, you can put a tight stop, it pulls against you, starts to turn, you can exit. But let's try and optimize the profits that we make in the market. So that's kind of where we are on the daily. Then we come back to our present time frame, and that's the view that we've got. So I want to go through that kind of thinking as well pretty quickly on the yen and then gold. Then we want to just work our way and start to look at a day that is closed and just see, well, where would my strategies fit? Okay, so this is a view. I've already set it up. And you should have your monthly setup already in there. But in any case, this is the kind of monthly view that we have. We have. I want to show you something else. We have this trading range here, the measured move up to there, which would also test the high that we have here way back in 2016. Now, when you see on any time frame, you just see dodges and tails, etc. And you're trying to figure out, where is the best place for me to work out my measured move. I always, suggest you just go right up here to a line chart. The line chart is drawn on closes, and the close of any period is significantly important. So you just click on that, and that kind of wipes away all those tails that may be confusing for you. So I just mark the low close and the high close, and the potential measured move is up here, and I mark my measured move based on closes. And then when I come back here, I've got it in there. as well. So it's pretty reasonable. You know, if it's clear for you, no need to worry about that. So that's what you kind of seen on a monthly time frame. Yeah, the market is kind of hang around sideways a bit, but each of these provides very good opportunities. So the bulls, right from this test here, a bit of a higher low from here, higher low from there, failed breakout beneath this double bottom, bulls strong, bulls are both. So bulls are showing strength whichever way you look at the market. 3 very strong candles, but then somewhere within here when we had the whole COVID situation, sellers have come back into the market, but we're still holding up above the moving average. Big tail, so the bull case is still strong. So if you're a bull, if you're holding onto your trade, stop has to be in the right place, and then just wait and see. Get onto the daily very quickly. Okay, so there's our daily. Now you can see that the market is going sideways. If you had taken any trade in here, where would your stop be? Stop always has to be at a technical place, and then you have to wait for a strategy to play out. So let's just assume whatever strategy you're taking, you decided to buy anywhere in here. Well, your stop has to be down here. If you decided to sell anywhere in here, your stop has to be up here. So always put your stop in any situation in a technical level. A technical level is where you clearly see that the market has turned, just to keep it simple. Now, if you're taking a trade in here, you don't want to open and shut and close your trades. So you must have a strategy, right? None of our strategies are set up there, but if you have to rely on your stop and wait to see what happens. Now, what's interesting here, I marked what is probably the okay, so if you go to closes again, so I'm saying to myself, man, this market is going sideways on the daily. I'm trying to see who is going to be dominant here. The bulls going to reassert themselves. So what's dominant in my eyes? What am I seeing on the chart that's going to give me a place for me to look at initiating trades? Well, firstly, you can see the highs and the lows, but also, within here, the bulls and the bears are creating a play bar by bar. That's forcing the market to have to try and do a major move down here or down there. And you may say, well, George, how do you see that? You could just place your low here and see how far it goes. So let's keep it clean. So you could just go from that high and say, well, I see that low, And you say, okay, so maybe when the market breaks beneath this low, it will try and make a measured move down here. When I'm down here, I'm at this low, happy to start to see if I get a double bottom, high low, and trade up into the trading range, or we get a breakout and a pullback. Okay, so you could look at that. And I'll put it back and I'll show you why I put mine there. Or alternatively, you could simply say, well, okay, there's a low here that's been created. I'm not trading the middle of the trading range. I want to see where the market is likely to go. Just a little bit lower. So there's a high there. Okay, I'm going to let this trading range price action play out until it gets to that extreme, which will finally get double top. I might get a lower high or breakout, whatever. So that's what you do because it's going sideways. Okay, there's nothing for you to initiate. If this had been a strong bear breakout and a pullback, we would have seen enough price action for us to initiate trades within it, but we're not. We're going sideways. You could also use just click on the line chart and go to the closes, which I did because there's a lot of tails in here. I want a bit of clarity. And that tells me, okay, that's a high, close, low, close. If the market breaks beneath that, I'm going to let it do whatever, but this is where it's likely to go, to the lower close than this, which means the base of strength. Then I'm going to change that. So from here, I have that low close, high close. I'm going to wait for the market to get here. If you put back your candles, or if you put back your bars, way back I must tell you the story. I used to trade off these bars, when I started trading, and whole boat trader says, what on earth is that? Why are you trading? I said, it's so clear. I mean, you can see there's the open, there's the close. And then he introduced me to candles, which I thought was quite interesting. It took me a while, but I'm telling you, once I got into candles, although I still talk of bar by bar, I like the visual side of what you get with candles. But if bars work for you, I mean, use them. It's still the market, right? Still getting some information. So use what works visually for you. But in any case, when you switch back, you will see just how reasonably exact the potential move would be to where the market has reached in terms of its extremes. So this would be a beautiful setup if it was a 5-minute time frame. You'd be saying fantastic. I just want to wait until I get down here and see what's there. This is my area to look for my strategy. It's not in the middle of the trading range. This is the area to look for, and the market is telling me that it's going to want to get there. So you're not making it up. The market is telling you you're going to break out of this little trading range, and you're going to get there, and you can wait for the trades to set up. Then, of course, then you just plunk down to the present 5 minutes, and you just gotta wait and see what you've got. So then let's have a look at gold very quickly. Again, same daily setup. We'll come to the daily. Let's have a look at the monthly. Okay, so you can see, with the monthly, you could do the same thing. What happened if we break above these? How far would the market want to go? It's quite a long way up. Bullish strength within the trading range. What are the key levels to watch? There's a high of 2021, which is just here. Okay, high of 2021. There's a high of 2020. That's just here. So it's a little bit of things which I'll show you on the daily that are here. But those are significant levels, which are pretty near. So you want to mark this level 1959.25 for my broker. You want to mark this because when it starts to appear in front of you in trading, you got to expect that the market will do something. Either the bears will step in pretty strongly to defend the high of 2021, or the bulls will have such strength and have a strong breakout. So you won't be surprised when you see that price action unfolding in front of you. By the way, I'm jumping the weekly because remember, like I said, the weekly time frame, you got to pop it open on a Friday morning or Thursday night, depending when you're in the market, because then just as significant as on each day, the high of the day, the low of the day is significant previous day. On a weekly time frame, the high of last week and the low of last week are significant. So Thursday evening, Friday morning before you trade, hop in. That's when you really have to look at your weekly. In between, day by day is significant, end of month, I look at monthly. Now, so we mark the high of 2021. I mean, you can see the market is been pulled up to there. So that's a significant level to keep our eyes on, which kind of, if you're a bull, you kind of be more confident to hold on to your trade at a technical level. Any stock should be still somewhere here and waiting to see, well, how are we going to get there? We're going to get there aggressively. It's going to be a breakout, a bit of a pullback, and market carries on. So you wouldn't want to exit out of any trades. If you got a lot of profit in the trades, you can take a bit off, but just leave your trades open. And again, as markets are fractal, fractal, these patterns repeat themselves anyway. So even if it's a 5-minute time frame, and if you're in trades and there's a significant level that you can see, it could be high of yesterday or another level that's popping up, just hold on to your trade at the correct stop and see what happens. Take off a bit of profit if you're a little bit concerned that there might be a huge reversal, but you might be surprised if it goes sideways or it could break out and you might earn some huge profits. Or one candle could just create one huge candle that gets to that level. We're not talking about that yet, but if you get that, then you have the opportunity to take out your profits on those huge candles, maximum profits, and then just wait for a pullback and see what happens. The other thing, I think we spoke about it before. So, out of this trading range, we had breakout, candle follow through. So that's a breakout. Whenever we break out about something and follow through decent breakout, coming from this test of the moving average. So classic pattern. Breakout, pullback. That would have been a decent trade to take on the daily. But how far do you think the market would go? I put in the leg one, pullback, leg two. That's that level. First leg of the breakout, and the market might likely to go the same extension after the pullback. Nice pullback after the breakout of the 10 EMA, which I used to indicate the strength of the breakout. And there you can see, that doji didn't just create itself out of nothing. There's profit taken there. Doesn't mean the market is going to turn, but guys who had seen this are saying, I can take full profits there or partial profits, and then wait to see what happens. This is another classical way. If you can take partial profits, take 2/3 of that. Try and hold on to the trade that's left. Because the market might just go beyond that. And if you've taken full profits, the problem is, how are you going to trade this now? What strategy are you going to trade? Because now you're going to say, oh goodness, it's above trading range. I can't buy above that. There's no way to get in again without trading against your strategies. You have to wait for breakout and pullback. But if you've held on a little bit, that's fine. Just see how far the market goes with that. And then, so you've seen the low of high of yesterday. Somewhere here, low of yesterday. So all of those would have set up whatever time you're getting into the market. Okay, so that's what I did. Been out of the market for 7 days. I've got to orient myself, just get a sense of where my charts were. Which makes it easier for me to say this now, come back in 5 minutes. I don't have to kind of wonder what's happening with the gold or yen or euro or the cable or the Sing dollar, whatever it is you trade in. You want to avoid being surprised. You want to stay pretty comfortable with what's happening. Yes, Ellen, that's exactly the point. If you take full profits, it can become so frustrating because you know your strategies, right? And your strategy says there's no way to trade here, but the market is moving in the direction. So you can't break your rules. You can't just jump in, because then it just gets worse, because you might make good profits, but that wasn't right, or it might reverse and turn against you. Do I hold on? What's happening? So if you've taken full profits, then just wait. Wait for if a breakout happens, wait for the breakout in the pullback, wait for the next strategy. But I had to, because full profits are fantastic, right? They are full profits. So I had to actually say to myself, rather take out 3/4, and you have a little bit left, because that little bit, you'd be surprised. That little bit could turn out to be another 0.5%, another 1%. So that's fine. And if it turns against you, you have room to say, okay, the market has turned. I can close the trades. And chances are you shouldn't lose money because you're already in profit. So. And that's good. That frustration is good. It's part of building your. It's part of refining your strategies. I think a few weeks ago we spoke about that, where you say, okay, if I've lost trades based on strategy, fantastic. If I've lost trades, I shouldn't have traded a problem. If I've won trades, that I shouldn't have traded a big problem. So you use that to refine your strategy. So good on that. So if you're taking full profits and you're frustrated and not trading, well done. So what I want to do, guys, is just let's just go back. This is Euro first, the week that I was away. I just want to hopefully present, by flipping through a few of these, a way you can start to look at your charts and identify your selling team and start to see where the strategies come to play. Okay, so if we get those, the horizontal red and green popping out, just ignore them. That's yesterday's high and yesterday's low. So if you are away and you came back and you looked at this and you said, well, what happened in this particular day? Forget about the fact that you may not have been in that particular session. You know, maybe you trade the US sessions, you were not in the UK or whatever. It doesn't matter. Just look at the charts because the patterns will repeat themselves irrespective of the session that you're trading. So have a look at here. You should just be gazing through and saying, oh man, that was a pullback to the moving average. I wonder what happened there. That was a double top, but there was no lower high for me to have traded. So don't worry about it. Pullback to the moving average, would I have traded that? Maybe not because of the, I would have preferred the bear candle. Fantastically, there's another double top. But now, we spoke of major trend reversals. Market is going sideways. Was there any trade for me to have taken there quickly? No, the market is going sideways. Don't worry about it. Now, if you find yourself taking trades, that's when you must realize patience is the name of the game. Quickly here, okay, the market started moving up again. Any pullback to the moving average I would have traded? No, nothing I would have traded. We have a higher low at the top here. And wow, look at this beautiful breakout by the bulls. Higher low at the top. Would I have traded that? No. Pullback. Oh, there's a pullback to the moving average. So we started from here with a bear trend, with a major trend reversal. We had a higher low, with the entry there. I didn't want to take it because it's been moving average at strong bullish price action coming out of the higher low at the bottom and went for a pullback. There's a pullback. Would I have taken that? Yes, you should have taken the 2-bar reversal off the 20 moving average. Entry above the stop has to be in the correct place. So if you'd taken that, chances are, you would have been able to make your one-to-one because you have. Let me throw. I'm going to talk about it quickly. I'm going to go through a lot of stuff, a lot of charts, but let me tell you, just show you what we're talking about. So you would have said, okay, chances are the market breaks above this low, this high, this break above this point, we might get a measured move today. Okay, we have seen there's no way to trade. There is a high low, fantastic for us. There is an entry beneath the moving average. Don't want to take that. But coming off that strong bullish breakout above this, the market may turn there, measured move, which won't surprise me if it does. Okay, so market may turn there. That's not a surprise. That means the bulls who took that for whatever reason, they will take some profits out. This is another classic one. So if you are trading this and you've taken that lower risk, you take some profits out there, hold on to it, keep your stop there and see what you might get. So even if you take out 3 quarters, you might end up that remaining quarter might create another quarter for you. But there, classic 2-bar reversal, you take that trade, stop here, and you say, now, where I'm not going to be in the market, where can I put my take profits? Well, likely measured move. There's one area that I think the market may go. I could put my profit there. I can also kind of say, well, if that's the first leg from here, let me delete this one here just to keep it clean. That's the first leg from here to there, and there is a pullback. Market might get as far as that. So there is the highest profit I could take. There is the least profit I could take, and just stick my take profit in there. Okay, so that's the end of this particular move. So you can take leave your take profit in there, go away, or wait and manage your trade. I love managing my trades if I'm in the market. I can take some profits there. Then I just want to watch and wait and see what happens. So a wedge pattern starts to create here. Market goes up past a hidden level of support, 1, 2, 3. We're not talking about that now, so I won't spend too much time. But that's an indicator of a reversal pattern. So if you're still in the market and you see that, you can close your trade. You might get a little bit more out of that, or you might come back to the same profit level. But there you said, okay, now what's the point of that? The point of this, and this I really want to emphasize to guys, if you can wait, so let's say you've taken that 15, so that's a 1-to-1. If you can wait through all of this stuff, remember it can happen anywhere, but if you can wait through all of this stuff and you take one trade and you make 1%, you haven't scaled in, you haven't done all the other position stuff that we spoke about. You take one trade and that's your session, that's your time gone. Now, if you get 2 of those a month or 3 of those a month, and you can get more, I mean, are you going to moan and complain out of one particular strategy that you get 3, 4, 5%? I don't think you would. But the point is, you would have been patient, right? You're not jumping in and jumping out, and you're waiting. And if you do decide to jump in and out for whatever reason, okay, let's say you decide, okay, double top, breakout, and let's say you decide, okay, I like that test of moving average, but not quite. There's another one. I'm going to take a trade. If you decide to do that, and it's not quite your strategy, but you're learning, right? You're learning where to take your strategies, and the market moves in your direction, you can take your profit out. If it doesn't move in the direction, if your stop is in the correct place, because if you're taking a trade there, your stop has to be there, and you kind of wait and you're hoping something happens and it starts to move against you, you can get out of your trade with minimal losses. So it's okay if you take trades and you're not quite sure that it's in strategy, but the point is, if you discipline yourself, if you just, as I keep saying, bite your fingers, sit on your hands, wait for that. I say to a lot of guys, okay, don't do anything else. I know I've told you about major trade reversals. I've told you about just wait for a pullback to the moving average. It's not as profitable as a major trade reversal, but it's easy money, it's good money, it's visible money. Just wait for that and take that trade. If you get good at major trade reversals, you can take the trade and wait and all sorts of things like that. So we're still looking at that particular day. We haven't spoken about wedges after hidden levels of support, so I'm not going to talk about this particular strategy and how you trade that. Let's talk about what we've spoken about. So you would have seen, okay, oh, there's a breakout. I'm trying to get into the trade. I got to wait for the first pullback. There is the first pullback that I can trade. If you take that particular trade there, your stop has to be all the way back here. That's the place to put the stop. And what would you be waiting for? So there is a breakout move. You kind of saying to yourself, well, if the bears are strong and they get a pullback, one pullback, second pullback, they might want to go as far as here or test that particular low. So that's the height of that breakout. Or you could also say, okay, first leg. So remember, we're looking at that pullback. So you could say, okay, that's first leg. There is a pullback. The second leg would get here. So my profit should be somewhere within here. So you put your entry there, stop up here, and you're trying to get down here, 1-to-1 or just less than 1-to-1. That's what you're waiting for. Then the market starts to move in this direction. You see that pullback to the 10 EMA. Remember, we said you want to take the first pullback to the 10 EMA, then you want to wait for the 20 EMA. So you might have seen that and you say, okay, I didn't take that, maybe I want to take that particular trade. You take that trade, your stop is still up here. That's what you're waiting for, and you're still hoping to get down here. Then the market starts to go sideways and moves against you. At that point, you can make a decision because it's breaking above my entry point. It's not going where I want it to go. It's created a trading range. You can close the trade. You might be able to get out with a small loss. You could wait, get out half a loss. But at this stage, you're realizing the bears are not going to get here. The bulls are in control, so get out of the trade. But these would have been legitimate trades to take. If you manage them well, chances are you'd get out with a small loss or with a small profit. So if you go to the next day, again, you have a look at it and you say, okay, I just want to see where would I have easily taken a trade. Oh, okay, there's a pullback to the moving average. Okay, And remember, they're okay anyway, but let's look at the chart that we're looking at. Why would we be saying this is a trade we want to take if we trade in pullbacks to the moving average? Well, because it's a clear breakout. Remember when I spoke about breakouts, there has to be a breakout candle. Okay, these two candles are good breakout there, but they're not breaking above the high of these closing lines. Breakout, follow through. Now you wait for the first pullback to the 10 EMA, the strength of the breakout. There is a decent trade that you would have had to take. Would have had to take is the key, because if it sets up as beautiful as this, I call this El Clasicos. It is a classic. You just take the trade. If it goes against you, it's fine. You know, random distribution, but that's a trade that you have to take. Of course, are you in the market, are you at work, whatever the case, but let's say it's set up for your leg one. So two types of hidden levels of support or resistance, measured move of the breakout, best profits, that's why we had that little bit of a pullback there, or optimal, let's call it optimal profits down here. So try and put your take profits within there. And if you are in the market to manage it, and you can see the strength of this. There hasn't even been a test of the 20 EMA. So the bulls are very strong. They're carrying on. So even if you're there and you've got full profit in, reduce it, take half off, because of the strength of what's happening here. Bank that and see what else am I going to get, because I don't have a test of the 20 EMA. So there is strength in the marketplace. So you would take that. I wouldn't take that. I don't like taking a second test of the 10 EMA unless I've had another breakout. Okay, here I didn't have another breakout. What's a breakout? You need a breakout candle. You need a follow through, which means the breakout is resumed again. There's more strength. Then you can get a test of the EMA. So that's a pullback, which is fantastic. I would have loved to see just a little bit more pullback to a double bottom to the 20 EMA. Would have jumped in happily. But anyway, you've taken that trade that would give you some good returns. And here you're just managing a trade, trying to optimize your profit. Ignore that trade line. That's from today. And you kind of say to yourself, well, where else could I have taken a trade today? Just to see where are my strategies forming. Well, there's nothing else that would have set up here. No major trend reversals, no other decent breakout and a pullback to the EMA that we want to trade. So again, just one trade on this chart. Okay, and remember you'll have several charts that you're looking at. Looking at, I think it was Wednesday last week, and you're going to say to yourself, well, what has happened? Where could I be taking trades? Where am I seeing things happening that would excite me to take a trade? Just a quick glance at your chart. The other way to look at this is to say, where am I clearly seeing the market changing from one direction to the other? Where am I clearly seeing the market coming back to the moving average? So I can look for opportunities there. So market coming back to the moving average, the first one that we see is here. The market clearly turning is somewhere in here. The market was going up, the market turned. The market clearly turning is somewhere in here. Then we have that breakout, which didn't go far, was a lower high. And then the market clearly turning was somewhere down here. So if we look at, let's look at this was going sideways, right? So the market is going sideways, try to break out above that, failed, try to break out beneath that. So this is failed breakouts above or below trading range. This is not a major trend reversal. You need to have a trend that reverses. That's what you got to bear in mind. So that's not, you wouldn't trade an MTR, major trend reversal here. But in any case, so the height of that trading range was here. Okay, and what happened when you got there? This is all within the trading range. What happened when you got there? Market tried to break it above that, wasn't convincing, came back to the moving average and carried on. Nothing convincing for me to jump into a trade. If you kind of say, George, I think there's a strong trend. Well, you're going to take it, but where you're going to put your stop? Your stop has to come way down here. That's the correct place to put your stop in that technical position. The market has to be at that level. Okay, which is fine if you put it there, but I'm saying that's not a pullback I would trade, because just like a major trend reversal, you want to see a trend that reverses, trend reverses, trend reverses. A pullback, you want to see a clear breakout before the pullback. The market is pulling back in a strong trend. And then I want to get into the resumption of that trend. That's why I'm trading the pullback. I want to trade a pullback to a moving average when there is no momentum before that. Because where is it going to go? It's just going to go sideways, or it's going to go against me. So here, the market does 10. Have a look at this breakout. So you see that low there? There is a breakout candle. What's it? It's got tails. What follows? Another doji. Okay. Then we have another breakout candle beneath that. Tails, tails, tails. So there's no strength here for you to trade. Pretty frustrating, but there's nothing for us that we want to trade. We want to see a breakout. We want to see follow through. Then I say, okay, let's go to the moving average and see what we get. So nothing for us to have traded here. Don't force it, just wait for it. So ignore this red line. Now we have bear candle failed. Another bear candle tried to break out, bit of a tail. There's a follow through, breaking out, a bit of a tail. There's another follow through. Okay, so 3 successive bear candles, of which I suppose the first one you could call it, but the last 2 broke beneath the previous low. Fantastic. Bears are showing strength, but I'm not trading anything. Let's wait to see what we get. We do get a pullback to the moving average. Off the 20, perfect trend track reversal, another El Clasico if you're going to trade that particular one. Now, you're not going to put your stop there because we had this lower high here. Market broke beneath it, and because we've broken beneath it and pulled back, you can put your entry, your stop above here. Put your stop above here and say to yourself, how far will this go if the bear case is strong? Okay, there is low, there's high. If we break beneath this, we might come down to this level. And then okay, maybe that's where I'll put my profits. Or alternatively, maybe this was a leg 1. This thing was a leg 1, or this was a leg 1 subdivided into 2, but let's not worry about that at the moment. Let's just look at the latest one. So maybe that was leg 1. Okay, so that was a leg 1, pullback leg 2. So I have best profits here. That was a leg 1, and there was a leg 2. There's another potential. So I'm going to take that trade, stop here, and let me see if I can get best profits or optimal profits or somewhere within there. Or I can take some profits and manage my trade. You take some profits, manage your trade, you get an immediate reversal. Or you can get out, if it's failed to go beneath here. You see there's some profits in that quarter that was left. So that would have been a decent trade. Now you can see we are in a trading range. Here, there's that high, there's that low. We are in a trading range. Where else could I have taken a trade? Let's prison it. Nothing that you would have taken a trade on. This is trading range price action. To this low, you can see all the tails. It looks like, oh man, I should have taken that trade and go that far. But what are you trading? You're trading a trading range right in the middle of a range. There's a low, there's a high in the middle of it. If you take that sell, you put it there, and yeah, you're likely to take the trade. Or if you take a buy somewhere here, you put it here. But let's not take trades in the middle of trading range. Let's wait for the extreme and see how we get on to trade. Let me jump onto the yen just for the sake of time, and let's look at something else. Okay, we just pull it back. Let's look at this week so far. Okay, Monday. What happened on Monday? You have a look at that, and I think I showed you guys the other thing that I think is pretty useful when you're training your eyes to see things. When you see a trading range, you can just do that. Okay, so there is a trading range there. Now, when you see a trading range, what are you looking for? You want to see the breakout beneath the trading range. Then you want to wait to see if you get a pullback in that breakout. So you get one candle, fails, follow through, tails. I mean, this is not classic. It's not a market is going down. You can see it's going down, but it's not a classic breakout. You know, at any time it might turn. Get a test of the 20 EMA, and you know, I wouldn't take that. If you want to take that, to put your stop up there, but let's not take that because we don't have a clear breakout. We then have off that EMA test, you know, followed through by the bears, pull back again. Now we have a double top, lower high that we have. And does it give you a way to get in? It doesn't give you a way to get in. You know, it looks market has gone lower. So while it looks like I could have, but there's no clarity. Very frustrating, but that's the reality of it. So there's no way for us to jump in. So let's assume we've missed that and not done anything there. Market trends here. Yes, we do have a trend, but we don't have the clarity we want. Remember when we spoke in speaking about major trend reversals, we said we want to see the trend broken, we want to see the previous low tested, then we want a higher low. Nothing happens. Market turns two beautiful bull candles, whatever, it could be news or just the market doing that. And you say, okay, fantastic. There is a break above that. There's another huge candle. It's not a breakout. It's coming to test the high of the trading range. Let me see what happens. And if the bulls are strong, they must put another candle. If not, we're going to go sideways. They'll put more candles or more bars for me to trade that. So again, nothing for us to trade here. So that tested the top of that trading range, just for clarity's sake. I want to do something else. So, you know, you just waiting and agonizing over this and saying that, you know, George said, wait, I'm running out of nails to bite, you know. And so you see that we're going sideways. But now, is it an opportunity for us to trade in this? It's a sideways price market, but it's a trading range. Do we have an opportunity to trade? Well, you know, in order for us to say we have a trading range, we have to see the trading range. We need two touches. That's the top. Okay. There is a bottom of it, two touches. So you have a double top. You've got to wait for a lower high. And I think I spoke about separation. I don't know if I did. You know, I don't want any lower high that's within like 5 to 6 candles. So I need at least more than 30 minutes price action for me to get confirmation that there is strength. But you know, technically it is a lower high, but I'm not going to trade that. You know, I want to see a lot more price action. So you know, we then have. So now we have a double top, low high, we have a double bottom, high low, breakout mode. Why is it breakout mode? Well, the market has created the trading range. It's created the double top and the double bottom. It's created a bit of a lower high and a higher low. At some point, there has to be breakout. You know, the market is not going to remain in a trading range forever. So I got a way to see who is going to create that. I then get another lower high. You see right here. There's this inside candle here. So you could have put an entry beneath that if you wanted. Stop right there would not have been triggered. Then what happens? That fails. We have bull, and then we have another lower high. So now we have that lower high, which we didn't trade because it's within 5 or 6 candles from the double top. It's just too close. You don't want to trade that. Just give it time to form and give you more information. Then I have another double top, which we're going to call it as a micro double top here. These 2 candles before this form. There's another one below that. So fantastic. You know, that there you could take that trade. Put an entry beneath there, put a stop there. If you didn't take that trade for whatever reason, it's above moving average, it's double top, I can see it, but I want to wait. Don't jump into the trade. You're going to have to wait, okay? But what you got to bear in mind is where you're coming from. And that's the point. You're coming from this setup that you didn't trade, you're not in the market, you missed it, but everything else is legitimate. So now we got to wait. Okay, so coming off that, there is the entry candle which closes beneath that, a little bit in that, failed. There's another one. Then we get a pullback to our 10 EMA. Remember, we're coming off there. There's a trade you can take, but the stop has to be up here. Stop always has to be in the correct place. And then you can manage your trade from there. Yesterday, okay, so where would you take trades? Let's quickly put it. I think this is quite fascinating. I can cover it quite quickly. Okay, so you would have kind of watched this and said, okay, well, this is good bulls, but where is the follow through? Okay. These are useful to always say to yourself, okay, I see that, okay, nothing for me to trade there. I would have wanted to see a follow through candle to confirm bullish price action, even if it's a small one, then I would have waited for the pullback to the moving average. Remember again for your notes, if we're looking for that first pullback to the 10 EMA after a breakout, we want that pullback to occur within a candle or two. So there's your breakout, there's a pullback, there's a 10 EMA coming up, there's a trade. You don't want the test to coming off the 10 EMA to occur after a trading range like this. Then there's no strength in that. Even though it's gone up, ignore that. Okay. If we get a trading range pullback to like a 20 EMA, these trades we can trade there. But for the 10 EMA, we want it to occur immediately, a bar or two within that pullback, then we can trade it. In any case, market gets here, so we're not entirely surprised because we know that's a measured move, and then now it's created a trading range for us. So there's the first kind of trading range that you got before it went down here, broke beneath this, no good follow through. There's another trading range. So not many opportunities being offered. Remember, we're not trading range. There's a trading range strategy, but here we're not, and I haven't taken you through that in depth, but yes, I'll give you an example earlier on. Then there's another trading range here, and you say, no, the market breaks beneath that trading range. How far is it likely to go? It's likely to go down here. So, at the double top, a little bit of failed breakout above that. I don't get a clear setup. There is coming off the 20 EMA, it's right above the trade range. We don't take that trade. Market then does its test of that, and now you're saying, okay, this is a reversal at a hidden level of support. It's the wedges which I think I must speak about it next week. There's another strategy which is quite useful. A reversal at a hidden level of support where you have three pushes, 1, 2, 3. That's a wedge. So we want to see the market coming off. We wouldn't have traded that. We have wanted to see just a smaller higher low here and taken a trade. But a reversal at a hidden level of support with three pushes coming to it is a pretty good trade to look at and trade. But in any case, market broke, tested that trading range high, tested the previous trading range high. We pull back again and we're coming to the 20 EMA. Now, if you have traded that strategy, which we'll talk about next week, and you see the pullback coming to the 20 EMA, and it's another pull, 1, 2, 3, there's a Fed push. That's a trade you could have taken off the 20 EMA, but stop has to be at the correct level. Your stop always has to be at the correct level. And what you are trading is a pullback from the breakout from a hidden level of resistance. So, and I'll give you a lot more information about it next week. But that's a decent trade you take. You could have would have wanted to take the first one within here after we've seen that, but it didn't set up for us. So it's a complement strategy to major trend reversals. Remember, major trend reversals, you have to see the trend, but here we don't see the trend, but the market reverses at a hidden level of support with three pushes coming at that level of support. It's a complement to a trend reversal, and you can trade it and come up with a lot more opportunities. My time has gone, guys. But the point was, so we finished. For us to give you any homework at all, just pick up any chart that you're trading. Only 5 minutes. Just go back and just say to yourself, okay, there's a particular day. of what I've learned so far, where would I have taken a trade? Where is market reversing? Where is it coming to a moving average? Where is a breakout? Where is a pullback? Let me find the opportunity. Start to bring these things together. And remember, if you wait, if you get 1%, you get 0.5% in a day. I mean, we're talking huge returns just by being patient coming our way. But I gotta go, guys. Thank you very much. It really has been fantastic, and we'll catch up next week. Thank you, and appreciate it. Thank you, guys. Thanks, John. Thanks, Ellen. Thanks for all your comments, guys. Cheers.